The ETF industry has been disrupting the way people access markets for more than 30 years. Driving all that innovation are the ETF issuers, the product providers themselves. Here, we get to hear their stories and learn what it takes to be an ETF entrepreneur. This is Wavemakers. Welcome to Wavemakers. I am Cynthia Murphy, Head of Research for the ETF think tank, and today we are going to be talking about impact investing. Joining me are two great folks in this space, Ethan Powell, who's founder of Impact Shares, and Jill O'Donovan, who's an impact consultant for the YWCA. Welcome to the show.
Thanks for having us.
Yes, thank you.
Ethan, let's start with you and set the stage a little bit about who is Impact Shares. It's a company that is not new to the space. You've been around for a few years and building that traction and the story for impact investing. So tell us a little bit how Impact Shares came to be and the story of the firm.
Sure. So Impact Shares was founded in 2015. We are a SEC registered investment advisor, but we're also a 501c3 nonprofit. And the idea behind Impact Shares was ESG is offered by traditional asset managers, lack both credibility and easily communicated social and environmental outcomes. And so our platform is designed to bring social and environmental advocacy firms into the capital markets, where we help them articulate their goals and aspirations for the private sector. We cook them into our series of social screens. We identify the leaders in each of the social or environmental sectors that they are experts in. So you can kind of think of it like sector spiders from State Street for social sectors, right? Where the sort of sub-advisor, if you will, which is our impact partner, is a leader in that specific social sector. And they help to craft a solution for us that really maximizes what we call social alpha, which is superior social outcomes relative to the issues that you specifically care about. And we have our two equity funds, one dealing with minority empowerment that is in partnership with the NAACP, and then the other dealing with women's empowerment that is in collaboration with the YWCA, which is where Jill is from. And that's the idea is create more meaningful, more easily communicated strategies that investors then can use to build bespoke ESG portfolios that reflect their own personal idea of what ESG is with their own personal social and environmental priorities.
So what I've always loved about the concept here is, for all of the amount of time we spent talking about the problem with ESG as a category, is this like really broad umbrella that has been used and abused by providers everywhere, giving all sorts of flavors that aren't really impactful to really hone in on that word. So I love the concept of this is about impact, as direct as it gets. And I want to go to Jill a little bit for that. But before I go, I wanted to ask, why go the nonprofit route? Why was that an important piece of this business strategy? Was it to add credibility to the effort? Was it just because to increase the impact? Can you tell us a little bit about that?
A little bit of both, right? I mean, if you think about these advocacy organizations, they don't generally trust or partner with private sector leaders. And they understand the 501c3 structure. They understand what it takes to be considered one. And it builds in a certain amount of trust. And hey, they're one of us looking after us. Actually, the head of UNICEF, Carol Stern, put it best, which was, I love the idea. I want to do a sort of child-oriented solution, but I don't know this space, and I fear I'm going to wake up in 5 years and you would have made a bunch of money off of our brand and our sort of intellectual property. And not really benefiting the constituents that the organization is set out to benefit.
So, Jill, let's talk a little bit about the concept of, an investment vehicle as a vector into creating impact for an organization like the YWCA. How did you get involved with Impact Shares? How did that connection happen, and why did it make sense for the organization?
Yeah. Well, it's nonprofits are always looking for ways to diversify revenue, and unrestricted revenue is key to the success of any of the nonprofits. To be able to innovate and come up with new ways to solve the solutions or the problems that we've been dealing with for years. And in this case, that was one thing we were specifically looking for, was a way to advance our mission and at the same time potentially generate revenue back to the YWCA. When we first came across this opportunity, it sounded too good to be true. Ethan was looking for a women's empowerment partner to launch an ETF that focused on companies that did best in their sector on various women's empowerment criteria. And we, as the YWCA, having 160 years experience eliminating racism and empowering women, thought that we would be a good partner for that. And so we, when we saw the criteria, these were all things that we've been advocating for years. Women in senior leadership positions, women on boards, women in senior management, parental leave, paid time off, sexual harassment policies. And we've been marching in the street trying to get people to understand these issues for years. And this was a way to have that bridge that connection to corporate America and more directly.
How did the criteria get built? Maybe that's more for you, Ethan. How do you actually put impact, gender impact in this case, or minority impact in the case of the NAACP, onto data points on a piece of paper and create an investment strategy out of that? What was that exercise like?
It each takes a sort of life of its own. In the case of the NAACP, they already had corporate reporting scorecards where they selected, I think it was 4 companies from 4 sectors, and they were the largest companies, and created surveys that they conducted with investor relations and other sort of senior people in those organizations. And they did that, I think, once a decade, right? So it really wasn't that scalable or actionable, right? And so what we did is we took those scorecards as a starting point and worked with Sustainalytics to try and translate as much of those surveys into publicly reported data from publicly traded companies here in the United States. And then for us, it really becomes their sort of common language to effectively engage with senior leadership in a more productive fashion, right? Because if you think of the NAACP, for example, they're very much historically a litigation-oriented activist firm with lots of attorneys. And when they called senior leadership at a company, they were afraid, right? Because they were worried about being sued. And so that's kind of the stick. And for us, the ETF really represents, okay, well, here are the 200 companies that are doing the most to advance the cause. And, it's really a carrot, right? We're trying to create a horse race with private sector leaders who want to be recognized as a company whose ethos empowers women or minorities. So that's the NAACP. In the case of women, we partnered with Equitable, which is a Dutch-based gender research firm, and worked with them in the YWCA to sort of craft what we thought was an appropriate representation of the YWCA's goals and aspirations for the private sector. And they're a great partner of ours, and they continue to do a lot of tremendous research in the space.
Jill, how have the conversations been when you're out there? I know you're an impact consultant. You've been very, very closely connected to this family of products, and especially women, the Women Empowerment ETF from day one. What are those conversations like, bridging that social awareness and desire for impact with the investing world? And from that, Ethan, I'd love to talk about why an ETF in the first place. Why does an ETF wrapper make sense as a connecting bridge between impact and an investment portfolio?
But one of the things I find most interesting is to spend a lot of time educating people on what the YWCA, who the YWCA is, that we're not the YMCA. They're two separate organizations, that our mission is to empower women and eliminate racism. And that, this is work that we've been doing for a lot of years. So, the one thing that right out of the box, one of the strongest benefits of partnering with Impact Shares for this product has been just having YWCA's name affiliated, and having a broader audience, using this more as a megaphone to sort of get that message out. Having the name affiliated with women's empowerment in the title of the product. So that's been very eye-opening for me. Having worked at the YWCA here in Chicago for years, it was surprising to me that more on a national level, there wasn't sort of that name recognition, or there was still that name confusion with the YMCA. But secondly, I think it's really given us a new avenue to discuss our work, a new audience to discuss our work, through those both in the impact investing world, but then also employees of the companies that end up in the fund every year, or to representatives of those companies, to really talk about the work. To really talk about the work that we've been doing, and how the things that we use to evaluate the companies, the different criteria that are used, can actually have that beneficial effect on women in the workplace. So that's been great. Like I said, we've attracted new eyes to the YWCA, new donors, new supporters, and then just the YWCA's own investment in this product has been great. So all the way around, I think it's been very impactful. It's put us in touch with other organizations that are doing the work that we've been doing for years. We're part of the 30% Coalition, or we work with the 30% Coalition to get more women on boards. We have participated in shareholder resolutions. The most successful last year was with Norfolk Southern to get additional paid sick leave for their workers. We have consulted with groups like the Institute for Diversity in Finance on various initiatives that they've had. We've been signatory to a lot of different shareholder proposals as well. So all the way around, it's given us a new platform to discuss our work and to advance the work that we've been doing for years.
Yeah, I love that. It's impact actually having an impact. It's delivering on the goal. So, Ethan, on that vein, I'm just curious about the decision to go with an ETF in the first place. I mean, I think the first one came out about 5 years ago. Were you in ETFs before? Why did the wrapper appeal to you as the place to deliver this value proposition?
Yeah, I've been in the 40 Act registered fund space for almost 2 decades. So, I was including ETFs. And if you think about impact investing, historically, people think of it as, private funds that have concessionary returns, where you're buying an old paint manufacturing plant and turning it into an artist commune or something, right? Well, A, that's really not that accessible. B, not many people have an allocation that can afford a concessionary return profile. So if you think about what's great about the ETF wrapper, is it really is a mechanism to democratize investment advice. And for us, that's meaningful because it allows people to build more bespoke ESG portfolios with relatively small portfolios, and be much more intentional with the impact. And for us, with this whole ESG debate on is something ESG or is it not, every dollar consumed, every dollar invested impacts the world around you. And for us, it's really about providing tools that allows everyone, not just the very wealthy, to be more intentional with that impact, and then have the right people, process, and philosophy in place to actually achieve that social alpha. If you think of traditional asset managers, they're disproportionately people like me, middle-aged white guys. And while we may be good at certain financial aspects, we have tremendous advocacy organizations that are full of individuals that have been, steeped in activist activity their entire career, and bringing them into the fold, much like you do a sub-advisor as a specialist, was our goal. So we think we've got better people, process, and philosophy to achieve the social alpha that we're setting out to achieve. And we think that ETFs really, it's the wrapper of the future and democratizes investment advice broadly, but we think is a great vehicle to democratize access to more credible impact strategies.
So I have to ask, I know we've talked about this many times before, but it is not easy to be in the ETF business. It takes patience, grit, and commitment, and growth can be hard even when the idea is great. So when you look back from day one to today, are there any big lessons you take from this experience as the founder of an ETF provider? Anything that surprised you on either how easy or how hard it's been, or where the opportunity is, or the engagement? What stands out to you as a lesson to anybody looking to enter this space?
Well, I would say our industry's reluctancy to embrace new concepts and new players, right? I think that in some instances, if we as investment professionals are ceding investment and security selection to social advocacy organization, it starts to marginalize our contribution to our clients' portfolio. And so I think there's a very intermediated system of financial advice, not all of whom are really embracing their obligation to help their clients navigate that social environmental impact as they see fit. So that was somewhat surprising. Risk aversion to just new concepts. Us being a 501c3 nonprofit is new, and our funding sources, and primarily the Rockefeller Foundation through their innovative finance program, is who funded us. And to your point, ETF, product creation, operation, distribution is very expensive. And we had a great partner. We have what we think is even a better positioned partner now with Tidal, in part because you understand the market, and you not only can operate the funds more effectively, there's actually a realistic path to distribution and growth that's something other than the YWCA and us at Impact Shares, advocating sort of in isolation. So being part of a larger organization with more assets, more people, more of a sort of recognizable brand, I think ultimately will really help these funds create the type of impact they were designed to create.
Yeah, it's surprising sometimes how such a global theme, that has global impact, the concept of, gender and minority and just equality in general can feel so grassroots sometimes. So every one little action at a time. Jill, I would love to just pick your brain a little bit about where do you see opportunity from here? Where do you see maybe the conversation misses the point, or what gets, we can do some myth busting, if you will, about is there such a thing as a woman factor and a minority factor, or is this just about the cause that, you may or may not be passionate about? What's the opportunity in this space?
I mean, I think that, so far the investing hypothesis has kind of played out the way we hoped it would, which is, these companies that the ETF holds are, score highest in their sector on these various women's empowerment criteria. And the fund has done very well. So I think it's, it kind of shows that, at least on some level, doing these things, if companies do these things, they will be successful companies. And we've been trying to get that point across for many, many years. If you invite more women into leadership positions, you have more diverse thought, you have, more ability to solve, more thought process around solving problems. If you provide parental leave and flexible time and paid time off, you have a happier workforce just in general. if you're transparent on your on all of these issues, I think overall you have happier employees, and happier employees stay. You have less turnover, and that benefits companies. We've been having a lot of conversations over the years since we launched with different companies about the criteria, both those that are in the index and those that aren't, just on each of these different points, and offering our advice and solutions to help companies that want to improve in these areas. So that's been great. One of the things we haven't mentioned yet is sort of how the YWCA, another route to benefit to the YWCA here, which is that Ethan has and Impact Shares will donate the net advisory fees back to the impact partner. And so in this case, the work that the YWCA is doing to help educate companies on this criteria can be funded through that donation. So we see, this is a very long term. We didn't create these problems overnight. They're not going to be solved overnight. But this is just one additional tool in the toolkit of solving some of the issues that are disempowering to women in the workplace.
Ethan, we'll close with you on a little bit of your outlook for, I guess, ESG investing / impacting. I actually thought a lot about, we've internally talked a lot about impact being the next iteration of ESG. I think folks understand sustainability. They understand impact in a way that's much more meaningful than just a broad ESG category. So how does Impact and Shares see the next evolution of this kind of aware, put your money where your mouth is type of investment approach? And anything that we can expect from Impact Shares in the future? Is the family of ETFs going to grow? Is what's ahead for the business?
Yeah, and I think broadly speaking for impact investing, I do think that it's somewhat hindered by the Department of Labor being sort of the organization of record that defines what a fiduciary is. And the Department of Labor basically changes hands every 4 years, and depending on who's in the office, you may get a very different interpretation. And so 4 years is a very short investment time horizon. So what that results in is most people that are guided by the ERISA definition of fiduciary don't allocate to ESG because they're afraid of the interpretation changing every 4 years, because that's a 30-year allocation in their mind, right? So I think for broader-based adoption of ESG principles, we're going to need something more statutory, sort of codifying ESG's role in a portfolio from Congress. And then, I think we'll start to look a lot more like the European sort of ESG environment, where everything's just cooked into every allocation that they make, right? As it relates to new strategies, we've had a couple of funds with the United Nations in the past dealing with climate change. We've got a fund on file now that we're really excited about. It's a catastrophic bond fund. And the quick background on catastrophic bonds is they're issued by insurers and reinsurers for specific perils and specific geographies. So, you can have a hurricane bond in Jamaica. Well, we think that's really instructive on the true cost of doing business and the true cost of holding hard assets in specific geographies relative to specific perils. So California fire bond, all of a sudden, the spread gaps out because, they anticipate having significantly more property and casualty issues relative to fire in California. So for us, tracking that sort of trend, I think, does a better job of illustrating the true cost of increased global climate volatility. So we believe that this ETF will end up being sort of a barometer for that cost, and not trying to solve it necessarily, but providing more capital so that our capital markets can better backstop that risk and better articulate how much that risk actually is costing us as a society, and just foster dialogue more than anything. So we're really excited about that. We're excited to grow our Women Fund and our Minority Empowerment Fund, and we're excited for our partnership with Tidal to help facilitate all of this.
Yeah, no, this is great. It's It's exciting to see Impact really making a difference. And, the product innovation in this space is fascinating. And so I wanted to thank you both for joining us today. Thanks for telling the story. Jill, thanks for coming and sharing us how an organization like YWCA is making a difference and invested in ETFs. And Ethan, congrats on the firm. And thanks everybody for joining us. We will see you next time.